The Houston Association of Realtors has released its latest home sales report for April this hour, as the real estate market here and pretty much everywhere else looks for ways to break out of what has been a prolonged holding pattern. Stubbornly high mortgage rates and steep home prices that haven't budged much, combined with economic uncertainty around tariffs, has led to gridlock in the real estate market. Here to talk about the latest report is HAR Vice Chair and local real estate agent Kat Robinson. Kat, welcome back to Hello Houston.
Thank you so much for having me back.
Okay, it's noon.
Yeah.
Afternoon. It
Hi.
came out. Any
Yes.
surprises?
No.
Oh.
Well, now sales were down 1.1% last month compared to April of 2024. So we have seen quite a bit of change just in 1 year, maybe not month to month, but there has been a change in a year.
Yes. However, I think with what you just mentioned between the uncertainty, our current inventory rates, and our interest rates, it's not a surprise that we're holding steady. And historically, I think Houston does hold steady. So if you look at numbers back to 2008, whenever we were going through that financial crisis, Houston held for the most part. We weren't affected like Phoenix and Miami and Las Vegas. We held. And so that is the same case today.
So if we're looking at this latest report where homes, you're saying that it was held. So we had no change in homes, sales up or down at all?
No, there's certain price points saw some decline. Some saw an increase. I know the luxury home sales from last month, we saw a 26% increase in March. April was flat. So we're seeing some changes there too. But overall, for all price points across Houston, it is a flat number.
So are people holding on to inventory? And if in fact they are, a couple questions about that. Is it because there was a point where interest rates were so great that it's not, people don't want to sell at other interest? I mean, we were down in the 2.5% interest rates, and you're not seeing that now. So are people holding on to properties longer? Are people, because of the economy the way it is also, they're ready to sell a home, but they'd rather hold on and pay the mortgage for a little bit, thinking, I'd rather pay this now because in a few months, a year from now, I could get a whole lot more for the property.
Well, it is definitely hard to let go of those low interest rates, for sure. But our inventory is almost 5 months of inventory, which is one of the highest we've seen in years. So I think that sellers are willing to let go of that so that they can go ahead and move up and get the home that they need.
Do most people have to sell their current home to buy the next home, or are there people in this market that are moving on to the new home, holding on to the one that they just left?
The majority of people do need to sell in order to buy.
So you mentioned that one of the big differences that y'all saw was in the luxury kind of areas, the higher priced homes. What's going on with mid to lower priced homes?
So mid to low price homes in the lowest price range is hard to compare or track because of the low amount of inventory. So the home prices from $150,000 to $250,000, that has very limited inventory. So the sales is directly impacted by the number of units that are available. So that is something that I like to track. If it doesn't make sense.
Yeah.
And as you work your way up, I'm gonna have to pull this up real quick. But the for 250 to 400,000, we're seeing. I think that one had the. Let me pull it up just to make sure that I don't misspeak.
Because I find it very interesting that the homes between that range of 250,000 to 400,000 is probably what most people could afford. So the fact that we have such low inventory and we understand what's happening kind of in the luxury area, what I would like to see is how people that are in that price range, which is the average person, how this is affecting them and where we're seeing moves.
Okay, so I have the numbers in front of me.
Yes.
And so the price point that has saw an increase is the lowest, from $1 to $100,000, we saw a 14% increase in sales there.
I would like to buy a property for $1 if you have one.
I know, sign me up for that, right? And then it was 100,000 to 150,000 saw a big decrease. Again, I think that's related to number of units available. The 150,000 to 250,000 saw a 3% increase, and 250 to 500, that was almost flat, is a decrease of 0.8. 500 to a million decreased 4%, and then the million above increased 1.6%. So, and a lot of the $1 million buyers, they, from my experience and my current clients that I'm working with, they've been hanging out waiting for the right house to come available. Mm-hmm. And so for 5 years, they got burnt during the COVID heyday of multiple offers, which sellers loved, buyers hated. They've been sitting and waiting for the right time to buy, and they're taking advantage of the numerous opportunities that are out there.
So what percentage of an asking price are most sellers getting?
So I don't have the exact number here, but I will say, based upon the experience that I'm getting with my current clients, they're usually getting a 3 to 5%. Buyers are getting a 3 to 5% discount. So it's not a significant amount.
So if you get 95% of your asking price, you're doing pretty good.
I agree.
Yeah.
I agree.
But even 90% used to be okay, depending on what you were asking. But
yeah. Yeah, no, I think our current market allows for some type of discount, and it creates a win-win situation for both parties.
Now, it seems like one of the quickest ways to boost sales would be lower home prices, but that doesn't seem to be happening. It's like we were just talking about. Why are local sellers, by and large, unwilling to lower their asking prices? Why are we in this holding pattern if their homes aren't necessarily selling?
So a lot of it has to do with the timing of the market. So most sellers are willing to hold on to that price as the market changes and shifts. So just like in holiday time, most buyers aren't active. So if you're listed during the holidays, you know that it's probably going to sit through that time period, and your buyer's going to be on the other side of the new year. Mm-hmm. And most of our sellers are holding their prices because they know that May's activities are going to peak our June sales. So we've got another month to hold on tight to capture those current active buyers.
Let me ask you this. When you look at the entire area, the Houston area, I don't want to say average because then you're calculating in, but most home values are where in the breakdown you went through? What are the most homes in this area? Are they the 150 to 250? What is when you say average, then you compile all the money together and then you divide it through. So I don't mean that, but
right.
What is it?
So you're asking for the median price?
Yeah.
So right in the middle, that median price is $339,990.
I guess that's not even accurate either. What I'm asking is, most properties in our area are in what price range?
It's under the million.
Yeah,
under $500,000. So I would say it's like that $400,000 mark.
Okay, so if you're looking in this area realistically for a property, you're looking for usually around $400,000.
Yes.
And so speaking of, I'm going to jump over to Galveston because there's been some news around Galveston becoming a massive buyer's market based on Airbnb. A lot of people are, owners are trying to sell their vacation homes.
Yes, that's correct. I was just speaking to a colleague just a few minutes ago about Galveston, and they are sitting on 16 months of inventory. Wow. So it's definitely a buyer's market there.
What's the average number here in Houston in terms of days or months that a house will sit on the market?
Well, our current number of days on market just increased from 50 to 54.
That's not too bad.
It's really not.
So what's selling best as single-family homes versus townhomes versus multi-complexes versus high-rises? How do those rank?
So single-family homes will be our number one.
Best,
Always will do the best. The condos and townhomes are underneath that, and then your high-rises, your land lots, and multifamily kind of tie for that third place. They kind of bounce back and forth.
And so we've kind of touched on this already, but you said how Houston is in this holding pattern because of the factors that we mentioned, and high mortgage rates, high prices, and economic uncertainty. And you're saying that Houston isn't budging, and we went through something kind of certain during COVID. Why do you think Houston is a different market compared to other areas?
A lot of it has to do with the job opportunities that we have. Houston is a hub for now technology. They're really building out that in our city. We've got oil and gas. We've got the medical center. We also have our port. So we have so much industry and opportunity in Houston that is not the case in other cities and metroplexes.
We talk so much about how people keep coming into the city, but your inventory that you're talking about, the people are sitting on, shouldn't they be snatching all of these up so quickly, because we hear about all these stories of so many people coming into our area? Are we seeing that reflected in the number, or is there a disparity there?
That's a great question. From what I'm seeing is a lot of the relocation, those families who are relocating to Houston, they're renting first before they purchase. Okay. So they're taking up that space in those beautiful apartments that are being built all across the city. And then once they get their bearings on our traffic patterns and where they want to go to shop and where do they want to put their kids in school, all of those different factors of life, that usually points them to purchasing.
Now, you said that right now the average person in Houston would buy a single family home. That is what most people want. In my area, there's a huge apartment complex going up. We see a lot of these duplexes, multi-family units. Is that saturating the market, I guess is my question. And does it affect how people still want single family homes?
So I think that there's always going to be a need for temporary housing. And also different chapters of life require that. So whether you're relocating to a new city, or even I've noticed a big trend with retirees who are now on a fixed income, they don't want to have home maintenance. So they tend to rent as well, so that they can just keep things on an even keel number so that they can live by a budget. So I think the dream is always to have that backyard. And I think, again, those newly built apartments provide that temporary space so they can achieve that dream.
Going back to the report, what was the most surprising change, or what did you find in that report that you think people should know about?
Well, I think that the months of inventory was the biggest surprise, because now that we're almost at 5 months of inventory, that is really a great opportunity for buyers, because you now have so many options to choose from. You kind of have the upper hand when it comes to negotiations, so that you can go ahead and get that 3 to 5% discount possibly, and you can either get that as a credit towards closing, or you could get it as a discount off of the price. What's important to you?
Knowing that information, do you as realtors, in the greater scheme of things, say price your house 5 to 10% more than what you want to get, because then you can negotiate it down to this level so that the buyer feels like they won, but you're still getting what you're asking for?
So every professional has their own strategy, right? That's the beauty of realtors, and that's why it's so important to interview multiple realtors to see what their strategy is for pricing. I believe that you should price it with market. So don't try to inflate your pricing. Hold tight, and you're more likely to get a buyer whenever you're priced with market than if you overprice it. And I think that's one reason why we have such long days on market at 54, because so many homes, they were testing the market, or, oh, we're the only one that's available on the street, or we're the only one with a balcony, or this, that, or the other. So they try to push it, and now they're still on the market waiting for that buyer because they inflated to begin with.
Tax assessments are going on. We know that I think tomorrow is the last day you can challenge it.
Yes.
My question is, are those the values you should be asking for if you're selling your house? Is that a true representation, or are we looking at two different worlds?
They're very different worlds. So your county assessment is a drive-by assessment. And unless permits have been pulled for improvements or anything like that, the county doesn't know anything that's going on in the home value other than the basic market reports that we're providing and what's public knowledge. So the county will never know what you paid for it unless you disclose it to them.
My mother always said, your first offer is your best offer.
Ooh.
Is that still true?
I don't think so.
No?
I don't think so. But again, what you need to know is the current market trends. So right now, your first offer probably is your best offer.
So it makes sense today.
Yes. Yeah. But during COVID, during that peak time, whenever you had 10 offers.
COVID's over.
I know, but there's also been times where, 2013, Houston had a huge increase in buyers. And so that too was a time when your first offer wasn't your best offer because you usually got 3 to 5.
We're speaking with HAR Vice Chair and local real estate agent Kat Robinson. You can join the conversation and ask Kat questions at 713-440-8870.
It's fascinating, this whole marketplace and how it's dependent on so many different things. It depends how the job market's working. It depends, I assume, on tariffs and what's happening in the economy. It depends on people's fear and how much are risk takers and all of that. When you look at the folks that are out there looking to purchase right now, who are they and how are they feeling as a whole, do you think?
So the buyers that I'm currently working with are professionals who have a secure job and they are relocating for work. They are unifying a family and creating a family unit. So they are wanting to buy a home together and create that. So it's life circumstances that are really pushing people to pull the trigger. Mm-hmm. And again, they have a secure job. They're either getting down payment assistance, and you can get more information about down payment assistance through har.com/downpayment.
That's interesting. So when you say that, are you talking about families assisting them or getting it from somewhere else?
No, there are so many grants available out there for first-time home buyers. And a first-time home buyer doesn't mean it's your first house that you've ever bought. Typically, it means you don't own a home right now, or that you haven't owned a home in the last 2 years. So you actually may qualify and didn't even know.
So flip that question now and come at it from who are the sellers in general that you're seeing? Why are they choosing to sell? What's going on in their world?
Many of my sellers are, again, life circumstances. So they're downsizing, upsizing. They are trying to reduce the time on the road for traffic or new job opportunities elsewhere.
Well, again, you can join the conversation at 713-440-8870. And we have a call from Tracy from Cypress who has a question for Kat. Hi, Tracy.
Hi, how are you?
Doing well. What's your question for Kat?
Well, Kat, I'm a real estate agent in Houston, and you were just talking about, values from the appraisal district and the county not knowing what you put into it. I have an interesting situation where all of my comps are looking toward, let's say, 380, and the appraisal is 405.
Interesting.
Mm-hmm.
Okay.
Right. What would you do?
So I would advise that owner protest their taxes and show that the valuation is incorrect. Now, and there's some other things to ensure during tax protesting. If you have a homestead exemption, that increase year over year should never exceed 10%. So we do have caps on that appreciation if you have your homestead exemption. So I would definitely look at those two pieces and help your client out on that.
713-440-8870. Leah from Cypress is on the line with a question for you. Leah, what's on your mind?
Hi, Ernie. I have a couple of things. You guys are pushing all my buttons this morning.
Okay, give us a couple of things.
Oh, my God. Thank you so much. I want to talk about the Galveston thing just for briefly. Please. And can I talk about, I have a couple of houses. I'm not a real estate agent. I'm a teacher. I teach at home. But there's a lot of, homes on my street. So I live in the Bridgeland community. It's a master plan community. It's a Howard Hughes, very expensive, but I'm a teacher. And in 2016, luckily, I found a townhouse, which is interestingly a single home. What is it called? A single what home?
Single family.
Yeah, a single family home, but it's like a townhome setup. I bought it for $209. I talked them down from $229 to $209 so that a teacher could qualify at the time. You know, I wouldn't be able to afford my house if I bought it for myself now. But I'm the seller that would price to sell. I would price it probably at like $315, even though they're telling me I can get $350.
Smart.
But that's not the case. No one's going to buy my house for $350 because they're not buying my neighbors' houses. You know why? The HOA fees are too high. Guess how much they are? $4,000 a year.
Wow.
And guess what else went up? Homeowners insurance. So I was paying, and I hate to tell you all my business, but I was paying $1,800 for my mortgage. Guess how much my payment is coming up this month? It's going to be $1,950 because my homeowners insurance went up, and so then my escrow went up. So I think that's part of the problem, you guys, is that escrow is hurting. Homeowners insurance is a problem. HOA fees are out of control in my HOA. Bless their heart. I cannot do the HOA. So luckily it's me and my husband. I pay the mortgage. He pays the HOA and all the other things, you know, like the monthly
Leah,
bills.
thank you for that. We're going to talk to Kat a little bit about it, and I hope we keep pushing your buttons all day. Okay. Your reaction to that, and also what she talks about here, which brings up another question for me too, is you're not just paying for the house. There's a price for a house, but there is the insurance, there's the HOAs, there's other maintenance fees, things like that you have to consider when looking to buy.
Yeah, absolutely. You've got to consider the entire picture, plus the condition of the property too. So if you purchase an older home, you may need to look at roof, HVAC, foundation, other pieces to maintain the property and keep it livable. So, but I think it is a huge concern for home insurance right now. There's a lot of major companies that have pulled out of Texas and California and Florida just due to the risk that is associated with our weather. So the Texas contract is a beautiful thing because you can negotiate for your option period. You can ask for 7 to 10 days, and you pay the seller to take the home off the market so you can investigate the condition of the property. That should also include investigating insurance premiums. How much is your flood insurance? All of those pieces, so you can truly investigate the cost of ownership for that property. And if it is not right, you can back out. The cost of backing out is just the cost of that option fee, which is a minimal scratch compared to losing your earnest money, which is typically a 1% fee, and you know, possible other issues. So that first option period is such a critical time to investigate.
We're going to quickly try and grab 2 more calls before we let you go. So I'm not sure if it's Nita or Nita is calling us from Sugar Land. What's on your mind?
Hi. So it is Nida. You got it right the first time. Thank you so much, Ernie. You guys do wonderful work over at Houston NPR. We love you. I was listening to your show, and you have a wonderfully informative guest. And I had a question for her about, old school wisdom dictates that real estate is a good investment for the long run. I grew up overseas where homes were built with honest-to-goodness cement and, brick, and they were sturdy and they stood the test of time. And I think one of the biggest learnings I had was just how feeble the foundations of homes here are and how fickle the structures are. I mean, they're not very sturdy. But given all of that, given the way climate change is impacting the wear and tear of our houses and all the other considerations that go into upkeep of our homes, is it still wise to look at real estate in Houston?
Nita, I'm going to cut you right there because of time, and we'll get that answer for us.
Yeah.
Yeah, I think they're feeling a lot of stuff is shoddily built, quickly built. It's not those old-fashioned homes that last for 100 years. What's your thoughts?
So I do believe that real estate is a great investment over time. So the repairs that she's speaking about, a foundation repair, it could cost you $25,000 to repair it. But if you amortize that number over 30 years, it's really not that expensive. So again, are most people staying in their homes for 30 years? No, the average mortgage is paid for 10 years. But again, $25,000 over 10 years, still not that big of an investment. And you have to remember that every month you pay that mortgage, it's like a forced savings account. It is paying down that principal that if you weren't paying for your own principal, you'd be paying for someone else's. So it is still an absolute great investment over time.
Kat Robinson is a broker with Compass Real Estate and serves as vice chair for the Houston Association of Realtors. Kat, thanks for being back on Hello Houston.
Thanks so much for having me.
And